All right, picture here the markets right now already trending down, and you got a statement out of the Chinese vice president saying that the U.S.-China really can't do a deal without the other as the March deadline approaches. And I want you to think about what he was saying. We cannot have a trade deal if the Chinese and the U.S. aren't involved together in doing this. To which most economists would say, duh! Would they invite Ireland or Liechtenstein into this? That's an obvious one, but you're going to get a lot of these obvious little flashes we get from news and wire services, each talking about, yes, we're going to meet, or then there's confusion, as there was yesterday, that a subset of ministers, vice ministers and the like, we're going to set the stage for talks next week that the president and his team were going to have at the White House. And then that was put off. There was confusion when Larry Kudlow had to come out and say, oh, no, that was never really planned. The other big meeting still is on. It's that kind of stuff. And sometimes they're just one-sentence flashes that come across the wires that can, move billions of dollars worth of stock. And it always amazes me. But this one's the kicker. We can't have a deal without each other, which would be obvious. Anyway, Market Watch's Greg Valliere. We've also got Mark Avallone and Jolton Bolton from Fox Business Network. I'm looking at these comments, Deirdre, and I'm saying, well, that's pretty obvious. But I'm wondering why they even say stuff like that outside of maybe the understanding that we're both jumping off this together.
Well, I mean, you set it up so brilliantly with your comments about, okay, there was a meeting that the Trump administration turned down, and Larry Kudlow was saying, no, there was never a meeting. I mean, we really saw the markets move off that entire dialogue all day yesterday. I mean, there is a lot of confusion, but what I will say is that we have seen direct foreign investment in the U.S. actually fall in 2018, so it is taking a toll. China, we've been talking about their slowing growth figures. It's also taking a toll there. So from sources that I've just been reaching out to, it seems like one of the worries is that President Trump is actually more ready to make a deal if China makes some concessions. I'm going to quote one of my sources here, to close the bilateral trade deficit and be a little bit more aggressive with that. And apparently our internal China hawks, like Geyser, one of note, is actually worried about that, because he's saying, like, hang on, don't just take that. We need actual real structural changes. Later today at Davos, the Chinese vice president, so he's the one who's in charge of negotiating this truce between China and the U.S., is going to be speaking at Davos, and I think there's going to be a lot of open ears for that. Investors also curious if he's going to obviously speak about trade, but then also speak about China perhaps stimulating its own economy, Neil.
Interesting. Mark Avallone, we're getting also comments from China's securities regulatory official, Feng Jinghai, I guess the equivalent of our head of the Securities and Exchange Commission, who was paraphrased here by Reuters, saying, I think there will be a deal in U.S.-China trade talks as the president measures success of his measures by the rise and fall of U.S. stocks, that they're keenly aware that this president, perhaps more than any of his other predecessors, keenly watches the movement in the markets, and he knows quite well that the markets are going to soar on a deal, and the Chinese know that he wants that badly. What did you make of that?
Well, I think that weakens his bargaining position, because you're right. The market right now is, I'd say it's the biggest factor weighing on stocks. And we're reading tea leaves because no one knows which way this is going to go. And you were talking about the tone or the inference or a word here and a sentence there. That's no way to make long-term investment decisions. And we're more in a casino with this. Every day, is it going to be red or black? So I think the Chinese are posturing and positioning just like the president wants to do. And that's why there's all this uncertainty.
Greg, what do you make of the progress of these talks or the confusion around them? We got a little close to something, then someone shoots it down with a report that it was apparently proven false yesterday, that talks at a lower level are broken down, and then comments like these that I guess are meant to sort of ease concerns that the two of them have to have a trade deal together, which is stating the obvious. But how do you play that to understand what's going on?
Well, I tell you, Neil, I think I'm on happy pills today. I think we're getting closer. We're getting closer to a government shutdown deal, but on China, I think also there's this reality TV drama, this theater that we're up, we're down, we're up, we're down. Of course Trump wants a deal, and of course Xi wants a deal. I think that Xi has to fear what every communist dictatorship fears, and that's social unrest. If we see a really dramatically falling Chinese economy, loss of jobs in the manufacturing sector, that's not a good story for the Chinese. So they equally have reasons to cut a deal.
Yeah, what if it's not equally, Deirdre? What if the premise we've gotten on this is wrong? That as much as the Chinese need a trade deal with the United States, right now, the administration might need that deal with China more.
Well, it does. That is the question. And when we talk to China hands, right, they say China thinks in terms of decades, if not centuries.
Right.
And of course, our elected officials are very much on a news cycle. And as we know, to one of our conversation points here, President Trump does like to talk about the U.S. economy. He's been tweeting about it again in the past 24 hours, just saying this is so strong. We shouldn't really have anything but joy right now about the underlying statistics. You know, I think it's all about what's most important. And I actually could see President Trump moving forward and talk if the Chinese were ready to write, I don't know, let's just say $1 billion check and say, hey, listen, over the next 6 years, we're going to buy a lot of U.S. goods. We're going to buy a lot of things from U.S. manufacturers.
Well, they've already apparently promised that. So yeah, you got to make good on it, right?
And then I guess the president had countered with not 6 years, 2 years. This is according to a Bloomberg report, with which the Chinese just said, okay, that's too soon. That's too hard. And then I guess that particular conversation point stalled at that point. But I do think a deal, I feel like the U.S.-China deal will have something before March 1st. I almost feel slightly, for what it's worth, more optimistic about a resolution for that than our own shutdown.
Mark, do you make any investment decisions based on on-again, off-again talks, or are you optimistic that a deal will be struck and you want to pounce ahead of time because it will be beneficial, presumably?
I think it's impossible to do that. I think you have to have a premise, and in this case, I think we're going to get a deal, but I don't think it's going to be a gigantic win for either side. The Chinese want to save face. President Trump wants a victory. I think they're both going to come away with something more neutered and say they did really well. Look, if we don't get rid of some of these tariffs, or even if they escalate, you're going to be in a situation where they become inflationary. They raise the cost of goods for U.S. consumer. Everybody's talking about slower global growth. Slowing growth and rising prices is a terrible combination. So the hope here is that prudence and better judgment win out. Both sides can hold their heads reasonably high, because neither one is going to sign a deal if they feel humiliated, and you make investment decisions based on a reasonable assumption that cooler heads prevail.